I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the FTC and a coalition of states sue Facebook for allegedly abusing its dominance to crush competitors, with calls to unwind the acquisitions of Instagram and WhatsApp. Facebook calls it revisionist history, saying those deals were cleared by the commission years ago. We will dig in. Plus, talk about a mega debut. DoorDash shares jump as much as 92% on IPO day, closing at a near $60 billion valuation. I talked to CEO Tony Xu on the big day. And Airbnb on deck, the travel and experience booking site preparing to go out of the gate on Thursday. Just how big will it be? We'll have details on one of the most anticipated IPOs of the year. Those stories in a moment, but first, the markets saw a tech sell-off amid more stimulus deadlock. Bloomberg's Abigail Doolittle joining me now from New York. Abigail, what's happening?
Oh, well, Emily, what's not happening? Lots happening on this day. But let's start out with the news that happened later in the day, what you were talking about with the U.S. and a group of states suing Facebook, accusing them basically of being a monopoly of sorts, trying to thwart the competition and perhaps seeking to break out Instagram and WhatsApp. And so this sent Facebook lower along with some of the other tech shares. And it is interesting, you were mentioning Facebook's response. It seemed a little bit defensive in the fact that they are saying that those acquisitions were cleared before, as opposed to an offensive response. This suit couldn't have been altogether surprising to them, but it sounds as though Facebook is going to come out with a fuller response after they've really reviewed the lawsuit. Nonetheless, this did send tech shares right across the board, from Facebook to Apple, Amazon, and Google, all of these companies facing some degree of antitrust action. Alphabet just 2 months ago. So this side of the equation is heating up, and that did send the tech-heavy NASDAQ 100 and the NASDAQ itself lower. The NASDAQ 100, in fact, down for the first time in 11 days. This was a piece of that puzzle. The worst day for the NASDAQ in about 5 weeks, down 2.2%. But another piece of this, Emily, ironically, was outrageous bullishness that we had for DoorDash. As you know, this company did IPO today, closing up an astonishing 86%. That is astonishing because the IPO price, as you know, was $102 per share. That was well above the raised range. So demand, the frenzy for these IPOs, absolutely incredible, moving through to Grubhub and Expedia. And one reason that could have caused selling, because again, we had records on the open, record highs, fears around frenzy. Some folks are even talking about the possibility of 1999. So maybe some folks worried about too far, too fast selling overall. But, you know, another possibility, Emily, returning to Facebook very quickly. Back in 2018, and that's when we really started to see very choppy action. That was also when the first shot across the bow around regulation of big tech came, and it's been happening over, the last couple of years, bringing these pullbacks with it. Back then, it really did seem like just that, a shot across the bow. Now it feels as though it's getting a little bit closer, so it'll be interesting to see whether or not investors start to take this possibility a bit more seriously. Today, they certainly did, Emily.
All right, Bloomberg's Abigail Doolittle. It was a rocky day. Certainly that DoorDash, those DoorDash shares, the ones to watch. We're going to get to DoorDash a bit later this hour as well. I do want to get back to Facebook now. The Federal Trade Commission and state attorneys general, led by New York, have launched an antitrust lawsuit against Facebook, accusing the social network of abusing its dominance to crush the competition. This is the second time in less than 2 months the government has brought a monopoly case against a major American tech giant. For more, I want to bring in our Bloomberg reporter, Ben Brody, who covers tech regulation in Washington. So, Ben, break it down for us. This is a monster suit, and 48 states signing on as well with their own lawsuit. Break it down what this means.
There's no question that this is huge. And as you said, this is a part of the stepped up antitrust scrutiny that is happening on these tech companies. You know, we had Google back in October. We may have more Google cases coming. And then we had the FTC in the 46 states today, as well as the District of Columbia and Guam. It's a massive undertaking, multi-agency, multi-jurisdictional, multi-judge. And it's going to be something that we're following with a lot of twists and turns, not just over the coming months, but I think over the coming years. And it could set a lot of precedent for this space.
So perhaps the Instagram and WhatsApp acquisitions, which happened years ago, should be unwound. This from the FTC. The commission's complaint alleges that Facebook undertook a years-long effort to maintain its monopoly through anti-competitive acquisitions and actions that target potential and nascent rivals. The commission's request for relief includes unwinding Facebook's prior acquisitions of Instagram and WhatsApp. This is the statement coming from Facebook in response to this. This is revisionist history. Instagram and WhatsApp became incredible products because Facebook invested billions of dollars and years of innovation and expertise in them. This was clear. These acquisitions were cleared years ago, and the government now wants a do-over. What do you make of Facebook's response?
Well, they've sort of been signaling this ever since at least Mark Zuckerberg testified before Congress, not the last time, but over the summer. He suggested this exactly when confronted with some of his documents that now appear in this case. He basically said we weren't buying up a rival to stifle competition. We were buying up a company that very easily could have fizzled, and we have built it into the behemoth that we have done. And it's an example of how we innovate to stay on top and to make consumers happy. It's certainly a pretty powerful message. And I think, as they note, they kind of have the FTC of a couple of years ago that cleared this as their primary witness to say that this was okay. I think the tune has really changed, as I said, across the states and at the FTC. And it may be that a judge may look at this and say, how is it possible that this mega rival that is, just has so many users is really just another internal product?
Hey, Ben, if you can still hear me, what is the likelihood that these acquisitions would actually be unwound and that Facebook would actually be broken up?
Yeah, sorry about that. That's a great question. It's important to recognize that unwinding, that breaking up a company is kind of the most extreme thing that a federal court can do, and judges are sort of loath to do it unless they're really convinced that there's nothing else that can be done to bring more competition to the market. And so it is something that we say is far off and not necessarily definite at all. But I think it's worth examining here that both the states and the FTC are looking for this. Now, of course, you can always start by asking for the most extreme thing, but that's not something that we've seen necessarily in other cases. And so it definitely did provide some interest to me that they were potentially looking for this spinoff. And it makes me wonder how much they think they might be able to convince a judge.
All right, Bloomberg's Ben Brody. Thanks so much, Ben, for that update. We're going to talk about this more throughout the show. We're going to hear from Connecticut Attorney General William Tong, one of the many states now taking legal action against Facebook. That interview just a few minutes from now. Also coming up, the most anticipated IPO of the year, Airbnb. We're waiting on the company to price. What should we expect after DoorDash's massive debut? We'll discuss next. And more of my conversation from DoorDash CEO and co-founder Tony Xu. This is Bloomberg.
It really is a testament to the hard work of all of the people inside the walls at DoorDash, as well as the partnership with our ecosystem, our merchants, the Dashers on our platform, everyone outside of our four walls for the past 7 years, as well as a reflection of the confidence that investors have about our future.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Got to talk about Airbnb coming up on deck after DoorDash's massive debut. Today, shares closing at $189 a piece, giving the company a $60+ billion market cap. Could it end up being just as big as, if not bigger than Airbnb? Bloomberg Tech's Olivia Carville joining us now, who's following Airbnb's debut tomorrow. Olivia, we haven't gotten final pricing yet. Do you have any indications?
Yeah, we don't have a final pricing yet. We're still waiting on that. But interest in Airbnb does look high. They've already increased their share price range this week, and we're just going to be waiting to see what happens later tonight.
So what does DoorDash's big debut signal to you? Obviously, it means there's a lot of appetite out there for tech stocks. Maybe folks who missed out on DoorDash might try to pile in to Airbnb. What does it say about investor demand?
That's right. I think that anyone who missed out on DoorDash today will be looking to Airbnb tomorrow. So I think it's likely that we are going to see one of those first day trading pops. But right now, it's just speculation as we're waiting for that price and waiting to see what happens on trading day tomorrow.
Now, what is the state of Airbnb at this moment? It seems things change by the day. Lockdowns, reopenings, new lockdowns. Airbnb has seen a rebound in domestic travel, but where does that stand at this moment?
Yeah, I think that's a big question for investors, is what's next for Airbnb. The company hopes that investors are going to be buying into this idea that it's already rebounded, it's bounced back, and it's going to stay running at the highs that it's running right now. But the problem is that nobody knows if that's actually going to happen. There's so much uncertainty out there at the moment with ongoing outbreaks, lockdowns still occurring, and a vaccine. No one knows when this is going to be administered or what's going to happen as it is administered to the travel market. Are we going to see domestic travel, demand continue? Is international travel going to come back? No one can really answer those questions right now, and the company's hoping that investors are going to look beyond that and focus on the fact that it's been so resilient through a crisis. It's really rebounded back faster than even its rivals, and they're going to be hoping that, that adaptability proves to investors that they should be confident that Airbnb is worth buying into and it's going to be able to face whatever challenge comes next.
Now, Airbnb's path to profitability is still uncertain, but so is DoorDash's. I wonder if investors are going to look at the company differently, though. We're seeing DoorDash potentially at a peak, whereas Airbnb is, certainly not where it was pre-pandemic, even though it is rebounding. And I wonder how investors will approach that.
I think that Airbnb is actually in a better position than some of its other tech startups that have gone public without turning a profit. They have been profitable on an EBITDA basis in both 2017 and 2018, but that dipped in 2019 as they ramped up marketing expenses. One of the benefits of Airbnb is that 90% of their web traffic comes directly to them, so they aren't as reliant on companies like Google, which gives them flexibility to cut marketing expenses instantaneously, which is something we saw them do earlier this year. They cut marketing expenses down to zero, which, was a big part of their survival through the pandemic. So I feel like while there's a big question mark around Airbnb's path to profitability, the adaptability and resilience their business model has shown may give some investors confidence in that area that going forward they will be able to make a profit.
Now, you and I have both spoken to Airbnb CEO Brian Chesky, and he has been pretty frank about how difficult the pandemic was. He has also said he doesn't expect travel to ever return to what it was. Airbnb went back to its roots with home sharing being the focus and pulled back from some of the other more exploratory initiatives, whether it was flights or hotels. Do you think that the company would go back to those things if things got better, or is the business fundamentally changed for good?
I think that's a really interesting question, Emily. I do feel like the pandemic was a bit of a wake-up call for Brian Chesky, and I think that he was aware that leading up to that, there had been some distance growing between the company and its core individual hosts, that largely run the platform by listing their properties on Airbnb. And as the company had been looking to diversify into airlines, into boutique hotels, into documentaries, into all these different areas, they'd really taken their eye off the individual hosts that make Airbnb what it is today. And I think the pandemic gave Airbnb's executives a sense of clarity that it's important to actually go back to the company's roots and really work to build up that particular business unit. And I feel like this is going to be something that we're going to see over the next couple of years as they come out of this pandemic, that the core hosting community is going to be what they really focus on. And then as they bounce back and as things start to calm down and we get more certainty of the future, they may look to diversify again. Experiences is a big area for them, the tourist activities that they offer on the platform. And we know that that's going to be something that they're going to be really focusing on, as well as homes.
So look, we're expecting pricing at any moment now with DoorDash yesterday. It happened as soon as we went off the air, about 40 minutes from now. What are you going to be tracking tomorrow? What are you going to be watching for in terms of the response?
Well, we're going to be looking at that first day pop and trying to measure Airbnb against other companies like DoorDash and Snowflake that have gone, public or debuted earlier this year. We're going to be trying to talk to investors to see what their reaction is, and also analysts to see what they think, and really just following the stock as it starts trading. It's going to be a really interesting market debut, and this has been a long time coming for the company and those early investors, those early employees that have been waiting 12 years to cash out.
Well, it's certainly going to be fascinating to watch as someone who has covered Airbnb for more than a decade, and I'm sure for you as well. Bloomberg Tech's Olivia Carville, thanks so much for your analysis there. We'll give you that pricing as soon as it crosses. Turning our attention back to the antitrust law, Facebook from the FTC and a coalition of state attorneys general. We're going to have an update on what exactly that suit means and what the states are saying coming up after this quick break. This is Bloomberg. All right, DoorDash going public Wednesday in a grand slam listing with shares jumping as much as 92% in their public debut. The pop making the company bigger than Ford Motor, and it could end up being even bigger than Airbnb. I spoke with the CEO and co-founder, Tony Xu, ahead of the trade opening earlier today and asked how he's feeling about the price.
It certainly is surreal, but I think it really is a testament to the hard work of all of the people inside the walls at DoorDash, as well as the partnership with our ecosystem, our merchants, the dashers on our platform, everyone outside of our four walls for the past 7 years, as well as a reflection of the confidence that investors have about our future.
Given that you were valued at $16 billion back in June, what is your case to investors that you are now worth well more than double that, especially out of a pandemic?
Well, I think the opportunity at DoorDash is just so early, and I've always been much more focused on chasing customers and chasing excellence versus chasing the scoreboard. And I think, as a public company now, I think many investors, frankly, any investor can certainly, have their turn at valuing the company. But I think what we saw in terms of the strong demand during the IPO process was, I think, both a testament to the strong underlying business that we've built today, as well as an appreciation for what it can become in the future. I mean, if you think about DoorDash, one half of our goal is building the largest local commerce marketplace in which we're bringing everything inside your city to you in minutes, not hours or in days. And the other part of our goal is to make sure that we can take the products we built for our marketplace and give them to merchants in the form of ordering as a service, logistics as a service, so that they can build an end-to-end technology solution just like we have for ourselves, so that they can serve their own customers and compete in today's convenience economy.
Now, you own 50% of the market, but you do face rapidly changing competition, consolidating competition. What are you doing differently than your peers? Why are you seeing this outsized growth?
Our growth really comes from the fact that we always obsess over building a superior product. And I think that can be revealed in a lot of the industry-leading retention metrics that are available and studied by analysts. For us, it's really offering consumers an unmatched combination of the selection of restaurants we bring, the quality of the delivery experience itself, as well as the affordability of the service that have allowed us to grow largely from our existing customers, and therefore have a lot more ability to invest and reinvest in acquiring new customers, as well as building new products, as well as entering new geographies. So it really starts with having built a superior product. That superior product is what also has allowed us to build a massive scale advantage, which is key in a network-based business like logistics. And finally, we've achieved superior unit economics, both through operational excellence and just getting waste out of the system, as well as winning parts of the industry, such as the suburbs, which are not only the biggest part of the industry, the fastest growing part of the industry, but also the most profitable part of the industry.
Right, and you definitely sort of colonized the suburbs early on. So if you have 50% of the market now, what is your outlook? What will your market share be in a year? What will your market share be in 5 years?
Well, we don't chase market share at DoorDash. We chase excellence and we chase the customer. We have a lot of work to do. I mean, today we are privileged to serve 390,000 merchants every month, 18 million monthly active consumers, and over 1 million Dashers. But those statistics, they're averages. They're not distributed uniformly. There may be certain neighborhoods where we should offer you more selection. We should get faster. We should be more affordable. So we have a long ways to go. But to me, it's always been making sure and reminding all of our teams that if we can master the inputs, then the score will take care of itself.
DoorDash CEO and co-founder Tony Xu there. Meantime, we have some breaking news out of Europe. Boris Johnson, the Prime Minister of the UK, and the European Commission President Ursula von der Leyen have decided to continue their Brexit negotiations at least until Sunday. This is potentially bringing them one step closer to a potential breakthrough, a potential deal, which obviously would be critical for certainly the UK and potentially the EU as well. The pair of them were having dinner late today, working on whether a deal could be salvaged and potentially even fast-tracked, but there are still a number of potential outcomes that we could see. Either they do make a breakthrough, they could have a falling out, and then talks are over, or let's say Sunday comes and goes and they agree to continue these talks. Of course, this has been a long time coming. We've been continuing to follow the very tenuous nature of these negotiations, the tenuous nature of the UK's position when it comes to their relationship with the EU. As we all know, this has been years in coming. Still very unclear how this relationship will continue to move forward. Again, just some breaking news that the UK Prime Minister, Boris Johnson, as well as the European Commission President have agreed to continue their negotiations at least until Sunday. We're looking at a number of possible outcomes here. Let's talk a little bit about DoorDash. This is a huge deal for you. You've been on the board. SoftBank made a big bet on DoorDash in the early days. And look at it now, a $60 billion company. What's your reaction to the debut and that big number, given that they raised at only $16 billion only 6 months ago?
It's a great day for DoorDash and all the constituents, the Dashers, the small businesses who are restaurants who are struggling in the face of COVID to keep their businesses open. And it's good for consumers. It's also good for the investors and the employees. So overall, a really good day. Obviously, strong market receptivity into a tough tape with a lot of news coming out across the world. So overall, really good day and a really important testament to the power of the SoftBank platform and Mas's vision about investing in next generation technology companies led by fantastic CEOs like Tony.
Talk to us about how Tony stands out from other entrepreneurs that you've invested in. He talked about delivering hummus from his Honda. It is hard to believe he founded the company only 7 years ago. But there were some tense days for DoorDash when they didn't know if they would be able to make the business model work. It is very costly, and there are a lot of logistics involved that are difficult to manage. And then the pandemic came along, and suddenly growth exploded.
Well, you know, Tony, you've met him, you've had him on air. He's just an incredible human being, high integrity, enormous vision, but also he wraps that with the ability to attract great people who are going to execute against that vision. And the results that he's achieved over the last 7 years has just been phenomenal. And so it's such a pleasure to be part of that story and to be able to be on the board with Tony and to see where his vision's going. And as investors, we look for enormous TAMs, amazing business models, but we all talk about great management teams, and he's built a fantastic one.
That said, this valuation, $60 billion. There are folks who say we're at peak DoorDash right now because we're peak pandemic. When a vaccine comes along and life goes back to whatever new normal is, yes, maybe more people will order food online than they did before. How much does growth slow?
Well, people said that about Facebook, about Microsoft, about Apple, about eBay, about Twitter, about amazing technology companies. And as Tony has said and described in the S1, it's not just about food. Tony is building, and his team, the next generation last mile logistics company. And if you think about all of the goods and services that are sold, how more and more of that's going to be moving online, and how people want convenience and things quickly. You have Amazon today on one hand, and every other business needs a logistics partner. And Tony's building a platform that is addressing a much, much larger TAM than just simply the food industry.
Do you have any concerns about the $30 billion that was left on the table? I mean, you've taken companies public before, Jeff. Do you think that this was underpriced?
Well, it's a difficult, as you know, it's both art and science. And what the market said today is we think very highly of the company, and stocks will move up and down, but it's an important day for the company, but it's just a day in the history. We, as long-term investors, think about the next 5, 7, 10, 15 years. And so I think there's a lot of growth ahead for the company.
Airbnb is coming up tomorrow. In general, when you look at the macroeconomic environment, tech has continually seemed to be divorced from what real-world Americans are going through. I mean, the stock market keeps going up, tech companies and valuations keep going up when you have people out there that are really struggling. Do you think we're in a frothy market? I mean, you have a lot of entrepreneurs in your portfolio. I know that you're a very active mentor and coach to them. Are you telling them to prepare for a bubble to burst or for the good times to keep on rolling?
Yeah, it's a great question. On one hand, we have COVID, a global pandemic, and it's affecting people's health and their livelihoods. And so we have to recognize that. On the other hand, you have a tremendous amount of capital around the world that still needs to be put to work. And you can't invest in bonds in the low interest rate environment we are. So people are investing in equities. And within the equity markets, they're looking at where growth and fundamental change is happening. That's happening in both biotech and in technology. And so as a technology venture capital fund, we're benefiting from that tailwind. And so what I talk to my CEOs about is building sustainable business models, making sure that your unit economic costs work, that your CAC to LTV ratios are working, and that you're building a sustainable business, because the economy will go through ups and downs. And if you are profitable, then you're going to be able to withstand those ups and downs, just like I did as a CEO through the financial crisis. So it's really about build a business to last versus just a business to go public.
Now, you've had a good year. You've also had Open Doors listing. Now you have DoorDash. Which of your companies is most likely to exit next? What's to come?
Well, there's a lot of companies in our portfolio across the 110 different companies we have in Vision Fund 1 and Vision Fund 2. Many of them are making great strides in product, in go-to-market, in sales, and profitability, and in market share. And so over the course of the next 12 to 24 months, we anticipate between 6 and 18 more companies in our portfolio will be able to tap the public markets. So we're just at the beginning. The Vision Fund is 4 years old. And as you know, it takes a few years for companies to kind of scale and to see public exits inside of a venture portfolio. And we're just at the beginning. I think the brightest days are ahead for the Vision Fund.
Well, and on that note, SoftBank did make some really big bets that didn't pay off. WeWork comes to mind. You have made some governance changes, but the reputation of the Vision Fund did take a hit. How do you respond to that?
Well, as you know, venture capital is a portfolio game. You're going to have a couple really, really large winners that are going to return the fund. And you're going to have some bets that give you a modest return and some that you're going to lose money on. That's the industry and that's the game. And if you look at the investments we made on a global basis, we're in the top companies within their respective industries with the most amazing set of entrepreneurs. And we've had over 200 different venture capital funds vest alongside of us in those different portfolio companies. So there's nothing unique about that. It's about portfolio construct. And overall, the fund is doing incredibly well, as demonstrating the last earnings report for SoftBank. And we're excited about what the future holds for us.
What's going on with the Vision Fund's SPAC? SPACs are all the rage now, as you know, with Open Door. Will you be involved in that?
Well, we're still in registration, so I won't comment about our SPAC particularly. But what I will say is that the Vision Fund has the ability to invest across the capital structure. So we could do public, we could do private, minority, majority. That gives us flexibility as we see opportunity around the globe to be able to put our capital to work in pursuit of great returns for our LPs. And SPACs in general are another tool that help companies get liquidity and tap the capital markets so that they continue to invest in R&D and innovation. So we're excited about having another, if you will, arrow in our quiver.
Now, DoorDash is one story benefiting from pandemic trends. It's not the same for other companies out there. You've got a construction company, C3.ai, which has a number of cool projects ahead, including building a gigantic city planned in Saudi Arabia. Can that company recover, and how much runway do they have?
Well, as you know, there are certain industries, travel, retail, movie theaters, that are struggling in COVID, and construction in some parts of the world. And then there are companies benefiting from the tailwinds, food delivery, ed tech, ag tech, stay at home, fitness and wellness, to name a few, video games. And so that we're in a particular part of the cycle, but we feel really good about the companies we have. They're well capitalized. They have enough cash to withstand the global pandemic. And we have a deep capital structure where we can support our portfolio companies, which is fairly unique in the venture community. So I'm still very optimistic about C3.ai, as well as a number of the other companies in our portfolio that are going through a tough time today.
So what are the trends that you're going to be doubling down on going into 2021, knowing that a lot of things will be different, but there will be some restoration of normal? We just don't know how normal it will be.
Yeah, it's kind of more of the same. Find great entrepreneurs with innovative ideas, tackling very, very large industries that we believe they can build companies to last, regardless of what the current macroeconomic condition is. And so, as I said, we're making a number of investments in transportation and logistics around the world. Biotech, we've been very active in. Enterprise software continues to do well. Consumer continues to do well. And real estate, as you said, I have Compass and Open Door in the portfolio. Residential real estate is doing really, really well as people are moving out of dense urban centers and buying bigger homes in the suburbs and in remote areas. So we think overall those trends are going to continue through 21 and 22, and we're going to continue to lean into them.
All right, Jeff Hausenbold, managing partner at SoftBank. Thanks so much, Jeff. We'll be watching to see where you put your next bets. Thank you. All right, getting back to that breaking news out of the Brexit talks, negotiations continuing until Sunday. Bloomberg's Emma Chandra joining us now from London. And Emma, dinner has finished between the UK Prime Minister and the President of the European Commission. Where do things stand right now?
Yes, that dinner has finished. It was a dinner that lasted for more than 3 hours between UK Prime Minister Boris Johnson and the President of the EU Commission, Ursula von der Leyen. Things broke up, and what we've heard is that things didn't go quite as well as perhaps people had hoped. Both sides saying that they remain far apart. They don't know whether or not they can get to a place where a deal can be done. But they have agreed that negotiators should get back around the negotiating table and keep talking, and that they would come to some kind of firm decision by Sunday. Now, we've also heard from both sides that the discussion was robust, that it was lively. Some of our colleagues in Bloomberg News also reporting from some officials on the European Union side saying that they think they could get to a deal, but that's not in the official text or readout from that dinner this evening. And we are seeing a bit of a market reaction here. The pound sliding. It had gained through the better part of today, breaking a 3-day losing streak. We're now seeing the pound drop off, Emily.
Now, there are obviously competing interests on both sides. Is this what folks hoped for?
Well, it's not really what people had hoped for, and certainly not from Prime Minister Boris Johnson's side. What we had been hearing prior to this dinner from his team was that they saw this as a way to break the impasse in these Brexit trade negotiation talks. They thought that his charisma, he would be able to sit down face to face with Ursula von der Leyen and be able to break through the problems. They were at dinner with their chief negotiators, Michel Barnier on the European side and David Frost on the UK side. Now, they're going home without any sense that necessarily a deal is completely possible, but negotiations will continue. It's not what was expected and not necessarily what many people in the markets and in the political world had been led to expect from this dinner, but the negotiations are still ongoing and we expect to get more news from them, or a firm decision at least is what's being said from both sides on where to go from here by Sunday.
So, where do we go from here?
That's a very good question. Where do we go from here? Well, they will go back to the negotiating table. They will try and decide where to go on Sunday. We do still have until the very end of the year before this Brexit transition period ends. So the UK formally left the European Union at the beginning of the year. Then they had this transition period in order to get a trade deal, how they would operate on a trade basis as the UK as sort of external partners to the European Union. They have until the 31st of December to do that and to get it agreed by then the rest of the European Union members. So we are still a few weeks off. It just depends how much appetite there is on both sides to keep those negotiations ongoing. Now, one would think that there would be a serious appetite for this because there will be quite serious consequences if a trade deal is not struck, and the consequences for both sides here. Certainly for the UK, the European Union, its largest external trading partner. And so if you get to a position where you don't have a trade deal with the European Union, on January the 1st, we're looking at WTO rules. Excuse me, can't get my letters out. It's very late here in London. They'll be operating on WTO rules. And that means, of course, tariffs. That means taxes on goods entering and leaving the UK. That could mean queues at borders for customs, and certainly for people in the UK and in the European Union, we will see higher prices on goods that have come from the European Union. And we actually heard from the chairman of Tesco today, who said that he could see prices rising 3 to 5%. So when you ask where do we go from here, we're clearly going back to negotiations. There is clearly appetite for a trade deal, and certainly we've heard from Boris Johnson's team tonight saying that they will do everything they want. They want to explore every possible avenue to a deal. Emily.
All right, Bloomberg's Emma Chandra for us in London. Emma, thank you so much for breaking that all down. This statement just coming in from the EU. We gained a clear understanding of each other's positions. They remain far apart. We will come to a decision by the end of the weekend, and we will, of course, be following it through the weekend. All right, coming up, another blockbuster IPO this week comes from the enterprise software company C3.ai. We're going to talk to CEO Tom Siebel about his growth outlook and how he plans to combat the likes of Salesforce next. This is Bloomberg. DoorDash isn't the only one to make an explosive trading debut this week. Shares of C3.ai, a provider of enterprise AI software, more than doubling after raising $651 million in its IPO on the New York Stock Exchange. Joining us now for more, founder and CEO of C3.ai, Tom Siebel. So, Tom, what's your reaction? You're certainly not the only big company to get out of the gate today. What's your reaction to investor sentiment here?
Well, I think it was. We were very pleased by the investor response to what we do, and very pleased, on behalf of all the employees of C3. I think they should be very proud of what they've accomplished.
When you see your shares doubling, do you have any regret there? Do you think the shares were underpriced or that you left too much money on the table?
Emily, the behavior of equity markets is just outside of my league. I really have no idea there. I am, to the extent that I have skills, it's in building and operating rapidly growing software companies. And so I stick to what I know about, and equity markets are just way beyond me.
So let's talk about what you do know about. You've been in this industry in Silicon Valley building companies for a long time. You're taking on giants like Salesforce, which just did a massive deal with Slack. What do you think you have on the competition?
Well, I'm not aware that we compete with Salesforce. We're in the enterprise application software business. We're building large-scale enterprise AI applications, and most of our customers are organizations that are, if they were not to use our platform, they would be building it themselves. Now, many of our customers, there is a void in the market, in the CRM market. So many of our largest customers of Siebel and Microsoft are asking that we provide fully AI-enabled CRM solutions. So Microsoft and C3 have entered into an agreement to provide those solutions. So there's kind of a vacuum in the market there that we're going to fill. I don't think we'll compete with Salesforce there. They're not really, to my knowledge, they're not in that space.
Now, given your long tenure in this industry, when you were last on the show, Mark Zuckerberg and Jack Dorsey were testifying before Congress. You said that you were glad to see that the government was doing their due diligence. Today, the FTC and 48 states have sued Facebook, saying the company has abused its monopoly and market power to snuff out the competition. Do you have any reaction to this, given that you've been in this industry a long time, competing with giants a long time, and know what it takes to innovate?
I don't know. I can't comment on the extent to which this is an antitrust problem, but I think what's going on with the social media companies is an enormous, public health problem. These people are using AI in very nefarious ways to manipulate billions of people at the level of the limbic brain. And you look at the effects on teenagers with, self-image issues, depression, suicidal tendencies, loneliness. I mean, it's just horrible what's happening. These people are looking the other way as their social media systems are weaponized by just enormously bad actors and basically threatening, jeopardizing our ability to conduct a democratic society. So these are very, very serious issues, and if the government doesn't look into this, we're going to be very sorry.
All right, Tom Siebel, founder and CEO of C3.ai, another company that had a big debut this week. Thanks so much, Tom, for stopping by. Still ahead, Gary Cohn, former National Economic Council Director, joins us to talk about tech regulation. I will bring you a preview of tonight's Bloomberg Studio 1.0. Coming up, this is Bloomberg. Despite the pandemic, the United States economy has proven resilient. That is the assessment of former National Economic Council Director Gary Cohn. I sat down with the former Goldman Sachs executive recently and asked about the public markets, which have been on a tear in recent months. If DoorDash's performance today is any indication, in a preview of tonight's Studio 1.0, here's his perspective.
We've got a complete disconnect in some respects between the largest companies in America, which are the companies we talk about every day when we're talking about the stock market, and what's going on in the real economy. And when we look back at what happened during COVID in 2020, one of the big takeaways should be, and I pray that this is one of the big takeaways, is that when we made a decision, and I'm not criticizing this decision at the time, to shut down the US economy and deem certain businesses as essential and other businesses non-essential, we unfortunately deemed the largest companies in America as essential. So we allowed the big companies to stay in business. But unfortunately, the local neighborhood business that sold the identical products we deemed to be non-essential and we shut them down. And so what ended up happening is the largest companies in America got 100% of market share. And they got that market share for zero cost. We were forced as consumers in the United States to go to the largest companies because they were the only ones open. So if we needed food or we needed prescriptions, we were forced to go to the big box retailers. But when we were in those big box retailers, we were able to buy clothes, we were able to buy shoes, we were able to buy appliances, things that the smaller companies on Main Street all over America sold. So the stock market right now is representing the fact that the largest companies in America got substantially bigger during this crisis because they were the ones that were open.
Well, and some of those are tech companies, Apple, Google, Facebook, Amazon. Has big tech gotten too big? Do big tech companies need regulation like Dodd-Frank legislation, which some in Silicon Valley have been advocating?
So look, I think you can't generalize on big needing regulation. Sometimes you can be very big and not need regulation. Sometimes you can not be huge and need regulation. You know, it really depends on what are the barriers to entry. Can people come in and compete with you? Are you horizontally and vertically integrated? So therefore, do you have a huge competitive advantage because not only are you providing, one product, but the one product you provide leads you to another product and another product and another product. So therefore, a new startup couldn't get there and couldn't compete with you initially. And also, are you competing against other businesses that are regulated now? So are you therefore on a unfair or not a level playing field? And if you start answering those questions, yes, then you're going to, or you should be regulated to look like you're on a fairly level playing field with the existing companies that are regulated today.
My conversation there with Gary Cohn, former National Economic Council Director. You can catch the full interview on Bloomberg Studio 1.0, airing tonight, 9:30 p.m. Eastern Time. It'll be re-airing throughout the day in Asia, the Middle East, the UK, and Europe, and you don't want to miss it. And just to recap, Brexit negotiations have until Sunday now to come up with a deal. This news after talks over dinner between Prime Minister Boris Johnson and European Commission President Ursula von der Leyen. We'll keep following.